FIVERR's earning came out for Q2 2021. It looks really good, but the share price is dropping 20 to 25%. I've got 50 more minutes before the market opens. We don't know where it's going to end. But today, I just want to give you my point of view on the earnings, the price valuation, and also an updated per buy trigger to help you make that decision.
We are the Family Investments channel. We focus on saving, investing, and growing your wealth so you can spend more time with your kids. My daddy works very hard for this video, so please like and subscribe. And ding dong! Enjoy the video!
Hello, welcome back to Family Investment. I'm speaking so quick because I want to give you as much info as you can in this short amount of time. So FIVERR's earning came out great. I'm not even going to speak about it. You can go read it on the Investors Relation. They've done really well. 60% year on year. They're on target of where they are. The reason why for it fell is the forecast for Q3 is not that great. They're talking between like 25 to 38% increase year on year. So that's a drop from the previous Q3 last year and Q3 this year. And also they made a statement because of the opening trade and people are starting to go up more. 1.5 months of data before they end their Q3 season. So they understand that they can see a bit of a decline because the business and opening trade are going a different way. But that doesn't suggest what the outcome of the company is because the financial year 2021 target seems to be still on target because they've achieved well Q1 and Q2. So this is where we are. Dropped 25%, so dramatic. Everybody's asking what is going on, Alex, what should we do? So my buy trigger of 180 before looking at the details has been triggered. 180, 190, it's a good time to buy FIVERR. As you all know, I've sold FIVERR and I'm actually thinking, wow, is it time to go back in and buy a bit and see what happens, dollar cost average down. Then again, I sat down this afternoon and look into the details. Of course, you need to look in details before you do anything. Let's go to the details. What are you paying for at 180 or 170? What's actually you paying for? Future value, undervalue, overvalue. Okay, this is where we are. So you know I work with Graham's Intrinsic calculation and then I work with my EPS future forecast. So I've used this website used on looking for the future EPS ratio. So the future EPS ratio for 2022 is looking about 1.4 in total. But this is before the earning. So will the impact of people using less during opening trade, will that actually affect in the long run? I'm saying 1.4 is a healthy number for them to eventually make profit. Remember, look at them. 2020, they're 0.29, breaking even. This year, they're breaking even. And next year should be the boom. The money market is starting to make money. All the investment for the last 10 years is making money. So what does 1.4 mean? Okay, me going on my intrinsic calculator, me put in 1.4, I expect another 50% growth rate because if you want to achieve 1.4, it's a 50% growth rate. So it comes around a number of about 191. So what you are paying for 180 to 190 just now on the discount drop is you are paying for an excellent year of 2022. So you're paying for 18 months ahead of the company. You're paying ahead. That's what you pay growth companies for. But the only downside is what if Q4 doesn't do well and next year Q1 doesn't do well because freelance economy drops. Okay, worst case scenario. And the number you get is not going to be 1.4. It might be 0.9, 0.8. And then the valuation will start creeping down. You go on a spiral downwards. So that's the risk you're paying for. But if you think FIVERR is doing great, which I've seen on hypercharts here, is doing nice on a nice growing curve. People are using more. The use shades per person now is about $300 per client that they use. Before, I remember the days of $70 per client. Now they've gone up to $300. And that's a triple mark. So I like it. So the company is still strong, but again, you're paying for the future value. That's why I took profit and thinking that it might drop one day and see it happen. I'm not saying I'm right, but this is how you value this, how you see the risk and reward ratio. Okay? But next, I want to go on my Fibonacci retracement tool, go back to the same chart I have. I'm looking at it just now. So the buy trigger, if I were to set today, if somebody asked me, Alex, what would you buy? I did say 180, 190. So first buy trigger, if you think that FIVERR will do well next year, you're confident this dip is just short term, then buy now. 180, 190, buy now. If it drops to 175 today, it's a good point to buy dollar cost average. That's what you do. But if you think, wait a minute, Alex is telling me there's a bit of risk. I'm not a risk taker, but I want to sit back and watch out. So if you can wait and be patient, wait until $156 or $160 per share. So that's my second buy trigger. 180 to 190, first buy trigger or anything below, or 160, second buy trigger. That's what I can tell you, and that's the risk you're talking about. So this is my quick, short, fast video that I want to share with you on FIVERR so you can go and make your decision today, tomorrow, or next week. But before that, please click like and subscribe so more people can see this great, useful information, because I believe I deserve a bigger space on YouTube here. Thank you very much. Have a good day and all the best.
I hope you enjoyed that video. If you want to see future videos, please subscribe to the channel and press the bell button. Ding dong! More videos.